So this is going to be a fun video. I'm going to review my entire portfolio with you guys. And I've not done a proper deep dive review of my portfolio since 2022. Just got busy with other things. But I have been seeing my, Zero the Console as I make these YouTube videos. So YouTube has been a great platform for me to actually go back and look at my portfolio. Because of my very passive investing strategy, one of the benefits is that I don't really need to look at the portfolio a lot. I make some small changes from time to time. So yeah, that's how I've grown this portfolio from 2.45 crores invested over time to the present value of 3.4 crores. Now, for me, honestly, this P&L and XIRR does not really matter. There was a video that I posted without showing the XIRR, and people actually said, why don't you show the XIRR, etc. So I just keep it visible. But honestly, these are just numbers that don't matter. Now, it's very important in anything that we do to understand what our strategy is and be self-aware, and also be very clear about what metrics matter to us, right? So for me, the metrics that matter here is really the invested amount. That's my favorite metric, to be very honest. So my favorite metric is this is how much money I was able to invest in the market. Now, this is quite contrary to what people might actually think of when it comes to investing. A lot of people might think of investing as, what is the return? Oh, you're getting a double-digit return, for example. There are some individual holdings which I'll go through. I'll take you through all of my top holdings where you'll see triple-digit returns. So these are all things that people are chasing. For me, somehow I get my high from how much money I've invested in the market. Now, 2.45 crores is my metric that I've put into the market. Now, this money can be used by big companies and small companies and medium-sized companies, which we have fancy terms for large cap, mid cap, and small cap, to go out there and have their own valuation and have their own business growth. And then as those companies grow, definitely my present value will increase. Now, why am I so free from the market? The important thing is I'm completely free from the market, and that's because I just put my money into the market. I'm not trying to beat the market. I'm putting my money into the market, and I know when I put my money into the market, I basically just put my money into the Indian economy, and I can bet on the Indian economy that it will grow as an economy, and hence all I need to do is just put in more money into the market, which is why my important metric is the amount invested. Now, this metric, if you break it down, what does this really mean, right? Let's make a new tab here. Let's do our analysis here. So this is August 2024, right? Now, you could be watching this video at any point of time and the principles will not change. The numbers will change. And that's the other reason why I say, don't worry about these numbers. You could have 2,500 rupees. You could have 2.5 lakh rupees. You could have 2.45 crore rupees. Like you see here, it doesn't matter. What matters is the principle, the mindset, and how we are going to apply the concepts in this review, right? So 2.45, let's just take that as a number. 2.45 crores invested into the market means this is the amount invested, which actually comprises of many other things. So it means revenue generated, right? So I have generated income / I call it revenue because I have businesses, but let's simplify it. Let's call it income. So income generated, savings. I have saved money, budgeting. I have been doing budgeting, which is why I was able to save money. And then consistency, because you don't put 2.45 crores in the market overnight. Obviously, you put it over time, right? So if you look at the dashboard, you will see that in action, that the money goes into the market over time. It just doesn't magically come into the market. You keep making income, then you put that money in the market. Sometimes you make a mistake. Like, for example, I've made mistakes, during crashes and so forth. So I learned it the hard way. But from the last 2 years, you see that from 2022 to till now, I've been the best at the market, and I've not reviewed the market or my portfolio since then. So I've actually done the best in terms of consistency when I've been away from the market. So that's a beautiful thing to understand, because we increase the size so you can see. These were all my targets, right? So my top 10 holdings, I was targeting. I was initially keeping only stocks. I was buying like only Reliance, L&T, Tata Consumer, HDFC, Nestle, Tata Motors, HCL, IRCTC, Asian Paints, Tata Power. If I had to put money, I would just say, let's just break it down like this and let's buy this one, right? And then slowly I moved to funds. Then for the 2 crore target, I moved to some combination of like FlexiCap and other funds. And now, as you can see, it's so simple, right? So let's look at how the portfolio looks like now. So we're just going to go on the holdings. I've simplified the process so much that 80% of my investments are now in the index. right? So if you look at Midcap 150, that's my biggest holding right now. And this is the entire Midcap index. So the 150 Midcap companies, I've put my money into those companies. And if we look at the values, I've put in around 30 lakhs into the Midcap 150, and the present value is around 45 lakhs, right? So this is around a 50% return. Now, someone might look at this and say, you've got 50% from Midcap 150 and you've got 62% from next 50. So maybe you should increase your allocation to what you're getting. Those things are not important. Those are all distractions. And the reason why I consider them as distractions, because I know what matters to me. What matters to me is how I'm going to invest and how much money I'm going to buy into these funds. So what I typically like to do, and we can see the trend here as well. Let's take the top 3 holdings. If you look at Next 50, that's around 26, 27 lakhs invested. If you look at Nifty 50, it's around 27 lakhs invested. And if you look at one of my small cap funds, which is in my top 5 holdings as well, so it's around 25 lakhs, and the NASDAQ 100 is around 13 lakhs. So the trend here is pretty much straightforward. This is almost my first crore, right? So the first crore is already covered in the top 3 holdings, right? And we can do a further 80-20 analysis to see, but most of my crores are going to be covered in the top 10 funds. So what we'll do now is we'll basically copy this entire thing. Instead of downloading the Excel, I somehow prefer copying this, and we'll copy up to the point of 1 lakh rupees, right? So anything which has less than 1 lakh, we're not going to take that, right? So let's copy till here. Now this is a sovereign gold bond. These are some REITs and all. Actually, anything below 1 lakh at this point doesn't really matter in the analysis because it's just too small to hold any significance. Now what we'll do is, first of all, we're going to remove all of the metrics that don't matter. So P&L doesn't matter. Buy value matters. Let's remove LTP. It doesn't matter. Let's keep present value because that's what's generated. Let's keep P&L here just for reference, but we're not going to worry about the percentages, right? So let's say which category this falls into. So this is Midcap. It's an index, right? Let's do size. I don't like to call it market cap because, I'm a very simple person. I just like to call it size. Big company, small company, medium company. Let's put mid, and then let's put here the type, index, right? Next 50 is going to be large, and it's an index. Then Nifty 50 is going to be large. It's an index as well. This is going to be small companies, and this is a fund. Right, so it's a mutual fund. So let's put, let's just put mutual fund because index is also a fund. Then we have NASDAQ 100. This is the top 100 tech companies of US, tech heavy index. So this is going to be large and it's going to be index. So you're seeing the pattern here already, right? So how much of the money is going to go in index, we're going to calculate that as well. Then we have the PGM India Midcap Opportunities Fund. So this is mid and this is a fund. Then let's see Kotak Emerging Equity Fund. This is mid fund. This is the index, the S&P 500 US index. So we're going to say large index, right? So a lot of mid-cap funds there. And I'll explain you the reason as well. Not all of these funds I'm still investing in. So I'll show you the funds which are active right now. Then this is an index for gold, right? So this is just gold. This is consumer index. So this is going to be mostly large, but it's going to be a mix. But it's going to be mostly large. So we're just going to put large, don't complicate things. Small fund. So it's a small cap fund. So now we are getting into the territory of individual companies, right? So this is something that I have not invested for a very long period of time. So if you look at these companies, these are some companies that I used to have, but I have not invested further into them, but they are still there and I don't want to sell them right now. So Hindustan Unilever is there, definitely large. All the stocks that I have are anyways going to be large, and this is going to be stock. Tata Motors, large stock. Bajaj Auto, large stock. The beautiful thing about these companies, though I'm not very focused on that, is that recently they paid me like very good dividends. Most of these companies that I have, they will pay good dividends as well. This is a tax saver fund, which I actually invested a long time ago because my CA was telling me to invest. 1.5 lakhs a year or something like that. Now I'm in the new tax regime, so it doesn't really matter. But this is mostly Mirai Asset. ELS is mostly invests in large companies only, and it's a mutual fund. MF. We were going to use the MF term. Let's just change that. Okay. Next we have silver. So now we are reaching below 5 lakhs. But let's continue. Let's do a few more. This is going to be just silver. Let's just put metals for both gold and silver. And yeah, this is just the silver index, second index, right? This is Hong Kong. So Hong Kong index gives some exposure to the Chinese companies, one of the most read investments in my portfolio, but it's definitely large companies, and it's an index. Tata Power, that's large stock, right? L&T. This was my favorite when I was buying individual stocks for some reason. I just like the company overall. Tata Consumer, large. By the way, there are no stock recommendations here. I don't buy individual stocks anymore. These are old purchases that I made when I was younger and more worried about looking at stock charts, etc. Now, as you can see, it's been 2 years I haven't been looking at a stock chart, so it's just kept there. It's almost like cash. It's made something, but it's almost not something we can count as an equity portfolio. By the way, just to clarify, this entire portfolio is only my equity portfolio. So if a lot of people ask comments about, do you have money in FDs, debt, instruments, real estate? Yes, we have all of that. But in these videos, I'm only covering my equity portfolio, right? So around, I would say, as a total, around 50% of my entire portfolio is in equity. So outside of this, I have investments through my company, family, and all kinds of things. But I am basically just sharing my equity journey. Now, this is the momentum fund, the first momentum fund that I wanted to talk about, because a lot of people have asked in the comments as well about my momentum investing. So the ICICI Prudential Nifty 200 Momentum 30 is the index fund. So 200, take the top 200 companies of Nifty if you want to understand this simply, and then bet on the 30 who are in momentum, right? So their prices are going up. That's like as simple as it gets. But yeah, I'll definitely need to make a separate video on momentum investing so that people can really understand how I've picked these. So this is going to be large, definitely large, and index. So momentum, but index fund. There are active funds as well. But, you know, as you can see by now that I'm more of a index guy. Small cap, I like the active funds. Now this quant small cap fund was really old investment, because I don't even know why I bought quant small cap fund. I would even say this is a mistake. And no matter how much returns it got, I shouldn't have got it. I just don't believe in the strategy that this fund house has. I think below this, I think it's just like things I want to get rid of or I bought by mistake. But yeah, this is one I wanted to talk about. The Nifty, this is just like a new one that I've got. So let's just skip all of these because these are just too small. Even this is small, but I'm growing it, and that's the reason I want to talk about it. So this is my mid-cap version of Momentum Fund. And my large cap version of Momentum Fund is the fund of choice is ICICI Prudential. Now, this is, of course, not personal finance advice. I'm not a financial advisor, and I have no sponsorship or anything by ICICI or Tata or any other fund house for that matter. So this is just like a lot of people ask, so I'm just sharing what I am investing in. So now what we're going to do is, I just removed the commas and cleaned up the numbers so we can make these charts. What we're going to do is we're going to take the present value and the size, and then we're going to insert a chart, and let's take this as, this is all fine. Let's check the setup, and let's change this to pie chart, add the label. So let's aggregate. Okay, so now we're able to see that 57% of the investments are large, then we have 25% mid, and we have 12% small. So this is how I usually review and rebalance my portfolio. Now, what I'm thinking is, I actually wanted more allocation into small and mid cap than what it is right now. So now I know that I need to put in more money into the mid cap and the small cap, because overall my portfolio allocation has become slightly different than how I wanted it to be. So that's going to be my main action item, that I'm going to keep more. I'm going to keep putting more compared to large cap, keep putting more into small cap and mid cap. So I want to get this under 50%. So right now it's 57%. I'm going to get this under 50%. And I'm going to increase the small cap exposure. Mid cap, my target is to get around 30%. So metals I want to keep for 5%. So that's already pretty good. So how we want to do this instead is, get down here, large cap to around 50%. Let it be 25% for now. The first focus is to increase the small cap, and this, let's get it to 20%, and this keep to 5%. So it'll become 50, 25, 20, and 5. That's going to be my first move. So it's a small move. The next move, I might reduce the large cap further and increase the mid and small cap. Now, will I reduce the large cap by selling? No, I will reduce the large cap by increasing the money that I'm investing into small and mid. That's how I would reduce. I will not sell, right? That's my main strategy, to not to sell, right? So that's the first analysis. Second thing, let's do the type by the present and the present value. And then let's insert chart, and let's make it pie chart as well. Let's aggregate. So now, as you can see, 60% of the money is in index, 24.6% is in mutual fund, and then there's 14.6% which is in individual stocks, right? So this is not my favorite, but I'm not going to reduce it by selling. Instead, I'm going to reduce it by keep consistently investing in the index and mutual fund. So that's how I think about rebalancing portfolio. And this was also like a common question that I got from many YouTube comments. I haven't done such a deep dive video before to my portfolio, but now you can see that I actually do have some stocks, but they are not some things that I've bought in like 2 years or more. Actually 3 or 4 years I haven't got individual stocks. So the idea is to slowly keep increasing the investment, which will happen in the next 10, 20, 30 years. You'll see that the stock pie will keep going down unless I change my investment strategy completely, which I don't see very likely to happen, because I'm going to keep focusing on making more income through my business rather than the market. And as life gets busier, I think my current strategy, which is mostly passive investing, will keep getting more and more passive, which means that this 60% that you can see for the index will keep increasing. And I see it this way. I am turning 34. When I will be 40, this could be around 70% index, let's say 70 to 75% index. When I'm 40, this could be around 80%. When I'm 50, this could be 80-85% index. And then it could change completely, right? But yeah, mostly the goal of this equity portfolio, which I've covered in the other videos as well, is to actually pass it on to the next generation. And how I will pass it on is like a different strategy, which we can discuss. And once I have more and more clarity on that, I will make a video about that as well. One rule that I follow is I don't make video about something that I don't myself have a lot of clarity on. So, but one thing I do know is that I don't want to sell, right? So I will keep generating revenue streams to run my lifestyle and fuel my other expenses and requirements. But this portfolio will continue to be something that I would like to pass on, right? So this is, like I said, 50% of my total portfolio, and the rest 50% I have a different strategy in mind for. But again, very simple strategies here. There's nothing fancy here, but I think that's the beauty of it, right? So based on this analysis, let's write down the key action points that we need to do, right? So the first thing is going to be, let's write it down here. Okay, let's make this slightly smaller. So based on this, the first thing that I see is my index exposure of 60%, mutual fund exposure of 45%, and stock exposure of 15% is okay. What I do want to do is get the stock exposure down less than 10%, which means that my index exposure will increase basically, or my mutual fund and index exposure will increase, which we'll figure out in the first, based on the first chart. But the stock exposure will go down by default as those exposures increase, right? So that's like beautiful way of doing it, because those companies are fine. They are large cap. I don't want to sell. I have honestly not, I don't want to get into that thing of selling and then paying tax and losing on compounding and then so forth. Also because there's no risk of keeping those, at least for me. And once it's less than 10%, I'll be more comfortable. So I want to get into that zone where the stock exposure is less than 10%. I mean, obviously everything is stock, even the index and mutual funds, but we mean individual stocks, right? So here we want to increase the small cap exposure to 20%. And let's do it by end of 2024. And we'll review it again at the end of 2024. So now it's August, we have September, October, November, December. We have 4 months to do this. We'll have to pump in more money, and which I can. So I'll take dividends from my company, from my business, and I'll pump in more money here slowly, so that the small cap exposure comes to around 20%, which means that the large cap will go down to 50%, right? Keep the metals around 5%, that's fine. And mid cap for now around 25% is fine. Ideally, my next goal, so this is all by end of 2024. Ideally for next year, I would like to see large cap go down to even lower, mid cap come to around 30%, and then small cap come in that 25 to 30% range. Then what will happen is like large cap will be 40 to 45%. That will be like a good place to be. I feel like that will be, as per my age and my risk appetite and all, that will be a good place to be, a little bit more in small cap. And by that time, things will change as well. But yeah, for now, this is my goal by the end of 2024. The next thing I do want to do is I want to do a fun series of videos where I will be taking up comments. I will be featuring and highlighting comments on those videos, and I'll be answering those comments. So ask me any questions that you have about any of the videos that you've watched. Comment in this video. I'm going to be picking the comments from this video, and I'll take the top questions and I'll answer them in the next video. So that'll be like a fun way to interact with the audience and also for you to get your questions answered. So that's all for this video. Thank you so much for watching, and I'll see you in the next one. Bye.